Good afternoon. This is Sam. I appreciate everyone today afternoon joining for the webinar session about my perfect group of business to talk about tax planning and different strategies and what can you do in this space to maximize your benefit. This is a second webinar in the series. Last time we talked about what you can do with net operating loss and what are the tools and techniques available and strategies available. Today we're going to talk about a complete different group of strategies, talking about how we can bring value in this special economic times. What are the opportunities and what can you do to save maximum money on tax savings? So again, my name is Sam Tucker. I'm Group CEO, Perfect Group of Businesses. And goal today is to discuss about different ideas, strategies. I really appreciate everyone joining this afternoon on a Saturday afternoon. I hope I can add some value today. I would also be taking questions. My mechanism of taking questions is on the top. You would see on your Zoom bar a Q&A section where you can click on that and ask questions. At the same time, you can also ask questions by clicking on chat window. I'll be monitoring both of that to answer your questions. Again, along with me, I have Vidya, who is helping me through this webinar. This webinar is also going to be is live broadcasted today on Facebook Live and on Phoenix's page of Facebook Live and Perfect Tax as well. So you can attend this seminar from both of those things via Facebook Live as well, or you can directly attend through this seminar. So today we have a lot of material to cover. So our goal today is I'll get started. We have close to 49 participants joining, and we already have few participants who have already joined. But we'll start our webinar today and then technically, have other team members continue joining us. So just give me 2 minutes. We'll get started. We are going through some technical challenges. We'll make sure that the webinar starts. While we are waiting, I hope again we are adding value today to you through this webinar, and we have lots of information to share. This is second webinar in the series of tax planning, and very soon, technically, this is a three-part webinar. So this is second in the series. We are very soon going to do, next weekend will be the last part of the tax planning webinar before we move to new topic. So again, we are going to share lots of exciting stuff. Let me know, ask questions through the chat window, or ask questions through the, if you want to ask, 1 second, I think there is this session for anyone and everyone, or is it targeted for small and medium business? So this webinar is, good for anyone who technically makes income. That includes the W-2. If you have, actually, that's a good question. Anil, this webinar is very good even for people who have, who are employed, full-time employed, or it is also very good for someone who have small business. I'll be covering topics related to both, for the small business and for the, people who are on full-time employee W-2 as well. But that's a great question. And that is a great, mechanism for us to test also that, people are able to listen to me, and people are also able to hear me on. So now we'll get started without delays. Through halfway through the webinar, I'm going to talk about, you should see a poll on your screen where, we will be asking you some experience-based information from your side to see that what can we do to improve and what are the things that we can do to improve. Please take your time to answer that question. That helps us, do the best way and how we can improve and what we can do to do things. I would also be sharing our phone number on this webinar. So if you have any questions, if you want to reach to us, you are able to reach us as well. Again, without delay, let's get started today. My name is Sam Thakkar. I'm Group CEO of Perfect Group of Company. A little bit overview about Perfect Group. Perfect Group started originally in business in 2002 as a home office firm. Today, Perfect Group is a diversified enterprise with, diversified enterprise and with businesses in media and entertainment and hospitality, real estate, tax and financial consulting. Group was named in 2016 as one of the fastest growing business according to, Inc. 5000 magazine. And we just got an update yesterday from Inc. 5000 that again in 2020, we have been selected as one of the fastest growing company, one of the top fastest 5,000 privately held growing company in US. So I congratulate the entire Perfect Tax team and Perfect, group of businesses to again make it to the Inc. 5000 magazine list in 2020 as well. Group's expertise lies in tax planning and risk management. So anything we do, everything we do, we keep that core in our minds. We also make sure that when we are technically doing your tax planning, when we are doing your real estate investment with us, we always make sure that, we keep your tax efficiency in mind. Group over last couple of years, in last 10 years has expanded from tax and consulting into real estate consulting, real estate development, media, hospitality and entertainment, and multiple industries over the last 10 years, with total employees growing now exceeding more than 400 employees as a group. And as a group, as an enterprise, we are now a diversified company with offices in Philippines, New York, LA, Dallas, Toronto, in Dubai, Sharjah, and India. So we are now actually present in multiple countries with our expertise into taxation, starting your company, consultation, media and entertainment, hospitality, and real estate. Our Perfect Group of businesses are mainly divided into following buckets: media and entertainment, radio channels, as you might already know. We own Fun Asia radio channel. We now have also own Big FM radio channel, which is one of the largest international, brand, which was acquired in 2020. We also acquired Love FM and Beat FM in Dubai. We are in the process of launching our first digital and media OTT platform, which is like a Netflix platform, Big Fan TV. We would be launching that in next 2 months. We have Fun Movie Grill movie theaters as a movie theater brand and food and entertainment brand. We have Fun Pizza Kitchen in Colony, which is a fusion pizza restaurant. And we are going to very soon start franchising that restaurant. That is a restaurant with 4.5-star rated reviews by Google, Uber Eats, and Grubhub, with more than 1,600 reviews exceeding 4.7 star. So it is one of the, if you're not dined at Fun Pizza Kitchen in Colony, it's one of the unique menu curated. And my recommendation is to check out the menu online, or you can order on through your online platforms or Uber Eats or Grubhub as well. We also are in concerts and events. We are the largest promoter of Bollywood concerts and events in US and UAE. In real estate development, we act under a brand called Thakkar Developers, and we are diversified into 3 different development cycle: residential development, hotels and resorts, and mixed use commercial. Residential development, we are building 100 homes in Plano, which is breaking ground, and model homes should be ready by the first quarter of 2021. And very soon we are also launching the first ownership multifamily apartment condo in Allen, where we will be launching over 100 units, and you would be able to own an ownership apartment, which you can rent it or you can use it for yourself. These apartments would run in range of 250K all the way to 500K. And it would be 1 bedroom, 2 bedroom, and 3 bedroom multifamily apartments. And it is the first opportunity for someone to use a resort style lifestyle apartments coming up in Allen. We have hotels and resorts in Dallas and beyond and outside Dallas. We also are building mixed use commercial development under Thakkar Developers brand in Allen. Our first 125,000 square feet office building is coming up in Allen. Under tax and financial consulting, we have, we do consulting for business returns, individual returns, high net worth individual, corporate and tax planning, and CFO services. This is just a picture of one of our development, which we are developing in Plano. This is where the 100 homes are being constructed. Again, I just took this opportunity to show you and unveil you this picture, that how this development would look. It's a $300 million development, being done in a perfect group of businesses. Today, again, as I said, these are some of the brands we are talking about, which we own or operate, which is Perfect Management, Perfect Tax, Fun Pizza Kitchen, Fun Asia, Fun Movie Grill, Big FM, Beat FM, Love FM, and Trident Movies. So we have multiple brands which do business on different capacity in different verticals and different businesses, with a CEO that heads each of these brands. Perfect Tax CEO is Vishali Thakkar and Perfect Capital, where through Perfect Tax and Perfect Capital, Vishali's goal is to help save money to businesses and individuals, high net worth individuals. At the same time, her opportunity is for helping small business to make sure that they are fully capitalized and they have enough funding available for themselves. This is just a small requirement that this seminar is ownership of intellectual properties, and recording photography of this session is strictly prohibited. Little bit about me. I joined Perfect Group of Companies in 2008 and worked through different departments, different companies. And today my role with the company is Perfect Group CEO, and I'm CEO for the International Media and Entertainment. My specialty and my expertise lies in tax and accounting, real estate development, financial services, media and entertainment. I have an accounting degree and business degree from UTD, and I have over 20 years experience working for various Fortune 500 companies, including banks and technology companies like Microsoft and Capital One. Our corporate group of advisory board includes myself, Vishali, Mr. Mahesh, who is the group chairman, Purvesh, who is the Thakkar Developer CEO, Mr. Sam Sayani, president of real estate, Dheeraj Kapuria, who used to head Z as a CEO before. He is the CEO for Fun Asia Media Group, Devas Dungal, David Pagan, Millie Patel, and Mohammad Qasim. Our business model primarily focuses into customer value creation at the center with innovative products, complex products, compliance, and core products. Our goal is to add value. Our goal is to help clients save money. And our goal is to make sure that they are able to get the maximum value for their investment dollars or for their, tax planning dollars, and for their income they make, they pay lowest lawful tax. I just want to make sure that foreign tax compliance is headed by Devas Dungal, who is director of Perfect Tax. And I would like to highlight primarily what does foreign compliance means. My goal today is to cover various topics. So we'll be going through a variety of topics. After this topic, we'll be covering tax planning. And then we'll be the last topic of the day would be is that how you can technically get some government opportunities and government, benefits right now going on for small business if you own one. Again, through the tax planning webinar, I'll be talking about, how W-2 filers, employees, and business owners can save money through various tax planning strategy. This is our second in series. Last webinar, I talked about that what is not net operating loss and how you can technically take advantage of net operating loss and how you can technically carry back your net operating loss for 5 years from 2013 to 2018 and get some money back from government. Today, we are going to talk about different group of strategies. And next week would be our last part of the webinar, which again would be covering different topics on W-2 and business and individuals on variety of deductions, what you can do to maximize your deductions. Foreign income reporting primarily is divided into two categories. One is you have to report your foreign account balance. So if you own accounts or financial accounts in international countries, you have to report them under FBAR and FATCA. And the income goes reporting in 1040. FBAR facts. FBAR stands for Foreign Bank Account Reporting. It has been existing since 90s. The purpose of the law is to monitor money laundering. The law is made by US Treasury and handed to IRS for compliance. IRS purpose is to identify person who may be using foreign accounts to circumvent US tax laws. What are the FBAR facts? Both small or large non-compliance are equal victims of this law. So a lot of people ask me this question that, hey, I forgot to report a small account. Am I not required to report this account? And the rule of definition is very simple that, and I give an analogy that if you go on a freeway and if you're going 10 miles over your speed limit, and another guy might be going at 50 miles over speed limit, now the cop might still catch you irrespective of what your speed limit was. So compliance is a required thing and it's not an optional thing. So I always recommend that compliance is not a choice. Compliance is a required thing as far as the IRS compliance or US law compliance are considered. Investigators use FBARs to identify and trace funds used for illicit purposes. They also are trying to identify the unreported income maintained or generated abroad. Unreported income are subject to additional penalties and taxes. Who needs to comply with FBAR law or Feinstein 1114 law? Green card holders, US citizens, H1, H4 visa holders, F1 completing 5 years in US. So if you're a student visa and completing 5 years in US, L1, L2 guys, US resident living abroad, even though you might be living abroad and you are a US citizen, you are still required to comply with the law as well. Why file? It allows taxpayers to become compliant with IRS. New FATCA treaty allows banks to automatically declare your accounts. So you like it or not, you report it or not, your accounts are being reported automatically to IRS by various foreign banks anyway. By proactively reporting it, you are eliminating the risk of criminal prosecution or substantial penalty or both. It also is providing the opportunity to reasonably eliminate tax impact and financial damage in the earlier stage. So in medicine world, the doctors always say prevention is better than cure. Even in financial world or compliance world, it's the same thing. If you proactively do something, it is always better than doing, you do it after you are caught or after you're in audit. More you delay, higher your penalties could be. Again, people who have recently joined, I really appreciate everyone joining this afternoon. My name is Sam Thakkar. I'm Group CEO, Perfect Group of Company. And we are going to be talking about compliance, tax planning for individuals and business owners. And we are going to also talk at the same time about some of the small business opportunities by government going through the COVID and coronavirus related stimulus package. This is an example of a case study where an Indian-American neurosurgeon, Vaibhav Dahake, pleaded guilty to offshore tax evasion. His account was reported as part of HSBC's reporting, and ultimately, Mr. Dahake was sentenced for 5 years in prison and $250,000 in fines, which was twice the amount of financial gain accrued to him or lost to the IRS. So Mr. Dahake also paid 50% civil penalty for failing to file reports of foreign bank accounts. So Mr. Vaibhav Dahake ended up paying a huge amount of penalty because he did not report these accounts, on time, in the right way. Sanjay Shetty was another guy of New Jersey who pleaded guilty in Newark federal court to an information charging him with conspiracy to conceal asset in undeclared bank accounts from IRS. He was born in India. Shetty became a lawful resident of US in 89 and a citizen in 2004. Sanjay Shetty pleaded guilty to charges that he concealed from US tax authorities nearly $7.9 million, which he held in accounts in India and Switzerland. He was sentenced to 5 years in jail, and bailed out by agreeing to pay $2.4 million in penalties for not disclosing the foreign accounts. So by not reporting the foreign accounts, it could be a very significant issue. I strongly recommend don't go on the basis of could I be caught or not. Peace of mind, if it could be achieved at a very little cost, if you proactively do it, your penalties are slim to none. Remember that. So it is very important for you to proactively go and do this thing rather than trying to go into this thing. It's not unlawful to own a foreign account, but it is unlawful to miss out on the opportunity to report the foreign account. So that is very, very important. The FATCA case study is another case study where Adrian Baron, recently a former executive of Lowell Bank Limited, Adrian Baron, 63-year-old, pleaded guilty, again conspiring to defraud US by failing to comply to FATCA law. Baron was transferred to the United States from Hungary in July 2018. Guilty plea was entered before United States District Judge. An undercover agent met with Baron and explained that he was a US citizen involved in stock manipulation schemes and was interested in opening multiple corporate bank accounts at Lowell Bank. Eventually, he was sentenced to 5-year prison again. So anybody who has joined recently, if you have any questions throughout this presentation, before we are getting into next topic, which is tax planning opportunity, I strongly recommend that you can technically go ahead and click on Q&A section or chat section to ask any questions to me through this presentation. Again, my name is Sam Thakkar. I'm a Perfect Group CEO. I work with Vishali Thakkar, who is CEO of Perfect Tax. I congratulate the entire team of Vishali Thakkar for Perfect Tax and Phanesia team to be selected on the Inc. 5000 magazine for 2020 as one of the fastest growing company. So again, thank you, Divas, and thank you the entire team of Perfect Tax and Vishali to make and take our company to new heights. The next opportunity we are going to talk about, the next topic, which is very important topic, and I get asked this question in various presentations and webinars I do throughout the US, in the various conventions I do, that what are the opportunity for tax planning? We have always heard that rich and famous, our president of the United States, Mitt Romney's to Donald Trump, have never paid taxes in the same percentage of 30 to 40%. Why do common men pay the same taxes or higher taxes? So we're going to discuss what are the tax planning opportunities, what you can utilize to reduce your taxes and save money. Tax is your number one expense. You could save so much money in groceries, lifestyle needs, sacrificing your lifestyle, but you still not save the same money. Tax planning is your number one expense, and if you save money in tax planning, you can create an everlasting wealth. I'm going to give a quick question to the people on the webinar, and I would recommend to answer that on the chat window, that if someone was to take $100 and pay 0 taxes and double its money every year. So year 2, and this is a riddle which I'm going to ask, or it's a question, it's kind of a quiz question, that if you own $100 and if you were to invest this $100 and invest it tax efficiently, if you were to pay 0 taxes on this money or this growth, and if you were to double this money every year, so $100 becomes $200 next year, $200 becomes $400 in 2 years, $800 in 3 years, in 20 years, what kind of wealth you would create versus if you were to pay taxes, capital gain tax every time. So if you were to double money, but every time you double your money, you pay taxes and again reinvest the money left after paying taxes to again double it. So example, if you were in a 30% tax bracket and you had $100, in a year two, you would have technically $200 minus tax of $30. So you would have $170. In year two, you would have $170, double it to $340. But again, you pay taxes on that money. So you would have technically, close to $450. So now my question is, if you were to pay tax every year and invest, the rate of return is the same because you're doubling your wealth every year. So rate of return is 100% in that assumption. Can you tell me on the chat window that in 20 years, what kind of wealth you'd create? I'll give you everyone 30 seconds to think and answer that. Click on the chat window or Q&A window and answer this question, that if you were to invest $100 and double your money every year, and in one option, you're not paying any taxes, one option you're paying taxes. So every year you double it, but you pay tax, again double it, you pay tax, again double it, pay tax. But in another option, you're doubling it every year, but you're not paying tax for 20 years on that $100. How much money you will have with yourself at the end of 20 years? Please click on chat window or Q&A window and try to answer this question. It's just a fun question, quick question. You'll be amazed at the amount of wealth you create and what tax could have an impact on. I think we have some answers coming in. Let's read those answers. Just 1 second while we are waiting for that answer to come in. So we have various answers that has already came in. Somebody has mentioned is $202,400 without tax. Good, good try. Anybody else wants to give it a shot? Let me give you an answer for that. That if you were to technically double your money every year and pay tax, then you would have at the end of 20 years about $4 million. You'd have about $4 million if you were to pay taxes and double your money for 20 years. Start with $100 and keep doubling your money every year. So it's every year you are doubling your wealth and your money on that $100. So if somebody had not paid taxes and kept investing that money and doubling the money, then you would have more than $100 million. So by not paying taxes or making sure that you don't pay tax and keep it tax efficient, you can have 25 times extra impact. That same $100 converts to over $100 million. Do this math at the home in an Excel file, and you'd be surprised that every year if you double your money, you will have over $100 million in your asset if you do it correctly. This gives you a quick synopsis. Supreme Court ruled that anyone may arrange his affairs so that his taxes shall be low as possible. He is not bound to choose the pattern which best pays the treasury. There is not even a patriotic duty to pay more taxes. Over and over again, courts have said that there is nothing sinister in arranging affairs legally as to keep your taxes as low as possible. Everyone does it, rich and poor alike, and all do right, for nobody owes any public duty to pay more than the law demands. This is the Supreme Court ruling, which was ruled a number of times about the same thing on this thing. So what are the ideas beyond which we know, beyond contributing to 401k or retirement accounts? What are the things we can do to save money on taxes? So let me explain you. There are a variety of ideas and variety of strategies of technically saving money on taxes. Again, this is a very important section. And, this section, this hour of yours, I will make sure that if you are making minimum 150 to 200K in income, each one of you are minimum saving $5,000 in tax savings. If you use these strategies and if you cannot save $5,000, Perfect Tax guarantees to write you a check of $500 minimum for coming and exploring with us that if we were able to save you money or not. So if you spend one-on-one with us, and if we cannot show you minimum $5,000 in savings using the same strategy I'm teaching you today, we will write you a check of $500 in your pocket for spending 1 hour with us. So again, a lot of people ask this question towards the session out, at the bottom of the slide, there's a phone number for Perfect Tax. You can also send your emails to info@perfecttax.com to answer your questions. We have a team of experts available to answer your questions. There are various strategies you can use to lower down your taxes. First strategy is, if you are paying taxes, there are about 7 states which do not have state income tax. So if you are in Washington, Nevada, Texas, Wyoming, Florida, and the 6 states which are in green, 7 states which are in green here, then you don't pay any state income tax, versus rest of the states, you do pay state income tax. So one of the idea is to move your tax income from high tax location to low tax location. So if your income is derived from high tax state, how can you move your income from high tax location to low tax location? How many of you know that Puerto Rico only has 4% taxes? So if you are one of those high net worth individuals who makes over $1 million in income, you can technically explore, figure out an idea where, if you're one of those guys who have accumulated that income over the years, you can technically creatively structure such a way that your income falls into 4% tax bracket if you structure it correctly. That's just an example. Even though Puerto Rico is part of US states, but Puerto Rico only has 4% total federal tax. Changing the high tax character to low tax character. What that really means is that we are changing the character of your income. So example, you all might be aware that your ordinary income is taxed between 25%. Well, it could be taxed as little as 10%. So I'm talking about someone making more than 150K income. You're taxed at 24% all the way to 37%. And the tax rates might even increase, depends on what is the outcome of the politics this year and what happens this year. But you all are also aware that your capital gains income on the other side attracts only 15%, 0%, 15%, or 20% taxes. So could you not convert your ordinary income into qualified dividend or capital gains, which could technically reduce your tax bracket? So this particular strategy is more applicable for someone who has business income. So if you have a business income, then this is one of the great strategy. Business income, consulting income, 1099 income, that is a great strategy for that. It is to convert the character of your income from high tax character to low tax character. And we can help you achieve some of those things. High tax person to low tax person. So what does this really mean? Technically, there are in US, for tax purposes, you can technically be taxed. Even companies are considered to be an independent entities. So they are like individuals and they have their own tax characters. Some entities have pass-through entity structure and they're taxed at individual level, versus some entities are taxed at the company level. So you can change your income from high tax person to low tax person. It could be your real entity or companies, or it could be people in your family. A lot of people, you might have also heard that if you own a business, you can hire your kids and pay them income. So technically, you can technically convert your income at a lower tax bracket. But remember that in case of audit, this is one thing which people make a lot of mistake. They read this thing online and they simply use it to the dot. They add income for their kids. And I have seen cases where they have added 6 months child, 2 years child, or 5 years child and shown them as a salary. But you need to remember that about $2,000 in income, your kids are taxed at ordinary rate or your parents' rate. Below $2,000 in income, they are taxed at 5%. So your maximum potential to save is about technically $300 to $400 or $700. But if you blindly follow this research from online, you could be exposing yourself to audits. What that means is IRS reserves right to interview your kids to find out that are they in the high tax, have they worked in the business? What roles and function they have really done in the business? You need to remember that we have strategies, same strategy could be implemented little differently, where you don't have to justify to IRS that technically you are supposed to, that your kids have worked in the business. There are strategies you can implement where even without your kids working in the business could derive the income and could be taxed at a kid's rate. Now, if your kids are above 18, then that's even great. Charitable planning strategy. This is the next group of strategy. There are close to 50 strategies in charitable planning strategies. I'll be discussing few. The main goal for charitable planning is to provide donation to charity of their choice in an approach that allows to save you more money. So keep more and give more is the approach of charitable planning. Wouldn't you love something where you can technically give more money to charity and support charities, help people who are in need, but at the same time, keep more for yourself? So clients should keep this in mind, and keep this plan is based on around the fact on donating to a cause that they believe in, and main purpose is for the charity. So if you blindly write a check of charity to a charity, you might be donating $500, $1,000, $2,000. But if you do it structured correctly, you could be donating hundreds of thousands of dollars to charity, but keeping more money in your own pockets as well. How? Let's cover some of the benefits, key benefits of charitable planning. Assets contributed are tax deductible, and assets could be contributed in cash or kind. You don't always have to contribute assets in cash. Assets contributed are excluded from estate and gift taxes. Client and his beneficiaries will have complete control of their assets. Client eventually donates to his or her favorite charity with tax efficiency. Diversified investment options. Assets contributed are creditor protected. Reduces capital gains taxes. Let's take an example. So if an individual donates to a donor advised fund, donor advised fund is nothing else. You can have Fidelity's donor advised fund. You can have Goldman Sachs donor advised fund. Perfect Capital or Perfect Tax, also has few more donor advised fund which it can refer you to, which can technically are cost efficient than Fidelity or the Goldman Sachs donor advised fund. And these donor advised funds are nicely created, which allows you to donate various kinds of asset, like your own businesses, your assets which are hard to donate. Once the assets are donated to donor advised fund, they can be continue to grow, and they could continue to technically grow in value, ultimately leaving more money to charity. So why people donate to donor advised fund and not directly to charity? They want to get a tax reduction today, but they are not aware of what to do, which charity to donate to, and they would rather keep that asset and grow that asset eventually to pay to charity. So donor advised fund money could be invested to grow. And what you can do is from the tax savings alone. So let's say if somebody was to put in $100,000 in donor advised fund, and they are in tax brackets of $370,000. Now, or they are in 37% tax bracket. So on a donation of $100,000, they would save $37,000 in tax savings. But with that $37,000, you can technically invest into a life insurance policy for yourself in a creative way, where you and your kids could walk away with more money, and at the same time, your charity walks away with more money as well. So now your money is growing in the donor advised fund by investing, but at the same time, you are leveraging life insurance money to replace that wealth which you donated. So that's a very, very powerful strategy in itself. Example of charitable planning: if somebody contributed $1.2 million asset over like this, $100,000 a year for next 12 years, if they had not done that, they would pay an average tax rate in a taxable state up to $480,000. And the assumption here is that life insurance policy typically is doing at 7.4% interest rate. So if you take that example, if you were to do this plan, with this plan or without this plan, you would have $5.9 million without the cash flow, without the plan. With the plan, you are technically have $12 million with yourself when you retire. So if you really compare between two plans, you are walking away with more money in your pocket and also leaving a lot of money to charity in this plan. So wouldn't you like to do a strategy where you can contribute to charity of your choice, leave more money for charity, and according to this example, keep more money for yourself and your kids? It's a win-win strategy. That is what we can help you. There are other strategies like CRT, Charitable Remainder Trust. We have NIMCRUTS, which is another version of Charitable Remainder Trust. We have CRUTS, which is Charitable Remainder Unit Trust. And those strategies could also be utilized to avoid capital gains taxes. Again, people who have just joined, please make sure that if you have questions, you can ask your question in your, in the Q&A section or the chat window. And I will, towards the end of the session, I will technically take this chat questions and answer that for you. What are the other strategies? Investing into energy efficient tax credits. Everyone knows that when you buy a tax efficient car or vehicle, you get tax credits. Same way, when you invest into solar energy, there are also tax efficiencies created. A lot of people think that investing into solar energy means putting roof on your house, but that could not be a strategy which you can use year over year, because your house, you can only put roof one time. You cannot keep putting roof every year. So what can you do in that scenario? What is the purpose of solar energy tax credits? The purpose of solar energy tax credit is optimizing and supporting clean energy, supporting the sustainable environment, providing tax benefits and cash flows to the investors. How solar credit works? You make solar investment. We would help you invest into solar farms. You receive federal tax credits and you receive additional depreciation for solar manufacturer. Investment group taxpayer, solar manufacturer, non-profit. Solar energy credit benefit example. Mr. Smith, who is investing money, $100,000, if he owes $100,000 taxes, if he purchases $50,000 tax credits and gets tax depreciation, then he will ultimately owe $16,532. He would technically get total benefit of $33,000. Net of fees, he would save $20,000 back into his pocket. So ultimately, instead of $100,000, now he's only paying $80,000 out of pocket cost, including fees, including purchase tax credits, and including government cost or government taxes. So instead of paying cash of $100,000, he's saving $20,000 in this example. A lot of people ask me this question about capital gains elimination. How to eliminate capital gains? I would like to, before taxpayers can get capital gains and tax deferral and more for making timely investments. One of the things that you can do is invest into qualified opportunity zone or use strategies like CRT, CRUTS, NIMCRUTS to avoid capital gains taxes. All of these strategies' goal is very simple. The goal is to avoid capital gains tax. And this is the same example I earlier gave, that if you were to take $100 and grow it tax-free, then in 20 years, you're going to have more than $100 million. Versus if you were to pay tax every time, capital gains tax of 20% every time you sell your asset, then you are losing, be it stock, be it real estate, be it any investment, you are ultimately losing technically 20% every single time you sell your asset and you're paying capital gains tax on your gains, which $100 grown same rate, you are only left with about $4 million at the end of 20 years versus $100 million. Example, you invested $2 million in 2015 in Acme Inc., sold the stocks in 2018 for $3 million. Then you invest that $1 million capital gains in a qualified opportunity zone fund, leaving you remaining $2 million of proceeds to use as you like. And by doing this thing, you are able to defer your capital gains tax for 10 years. At the same time, you not only when you invest into qualified opportunity zone fund, you're not only deferring your tax for 10 years, but any further growth on this amount becomes tax free if you were to invest for 10 years. We have a lot of funds which available with us, which we can help you invest into qualified opportunity zone funds. So if you really look at this thing, somebody investing $1 million in qualified opportunity zone fund technically is going to walk with a huge tax savings with paying zero capital gains tax on further growth of this $1 million, and at the same time on this $1 million he's going to defer his tax liability for 10 years and get 15% benefit on that deferment. Eligible investment must be a partnership or corporation. It could be any other business that you like. Few excluded business for this tax planning. State income tax. Most state income tax laws are structured so the deferral under section IRS section code for state income tax purposes. There are a variety of other strategies. There is one more strategy which I'm going to cover next week, where how you can utilize your primary home and claim in this COVID situation 80% of the expenses as a qualified deduction. We have multiple projects which are available as far as qualified opportunity zones are available. I'm going to launch a poll on your screen. Please look at that and let me know I would give everyone about a minute to answer the question before we move on to the next section, which is on what are the government programs available for a small business owner to take advantage of this thing. Previous strategies, charitable planning strategies, solar energy tax credits or energy farms, all of them are available for people who are on W-2 also. So people who are on W-2 can very comfortably do invest into solar farm and get discount of 20% almost on their taxes. Or this year, if you are actually contributing, you can contribute up to 100% of your income into a donor advised fund and take a full 100% tax write-off, paying zero tax on your income. So I've launched this poll on your screen. Please take your time to answer 2 questions I have. That way we can help you how we can technically take advantage of that. Please answer this question, which enables us to make sure that we are able to help you and provide you the best services in this thing. We'll keep this poll on the screen for a minute before we go to next session. Please everyone vote. This really helps us technically enable that. I appreciate everyone who has already voted. There are more people on the webinar. Please take your time, so that way I can, before we go to the next part of the presentation and starting Q&A section towards the end. It takes quick 30 seconds for everyone to answer this question. It enables us for us to understand that how we can help you optimize and benefit you through these webinars, which we are doing every time. We appreciate everyone's participation as well. We have this webinar poll on the screen for another 15 seconds, and we will continue with the presentation after this. Thank you everyone for participating and whoever has answered questions. So a lot of small business are right now struggling. A lot of small business are trying to identify that what can they do to survive through this tough time And businesses who survive through this tough time are going to come out on the winning side compared to businesses who did not survive. So a lot of people know that as part of the CARES Act, government introduced various programs like PPPP, EIDL, Main Street Lending Program. So right now, earlier we talked about tax planning strategies and those things. Now we are talking about how Perfect Capital, a division of Perfect Tax, and Vishali is the CEO of Perfect Capital and Perfect Tax, and Phoenicia Radio Dallas CEO. So Vishali has created this divisions to help small business optimally take full advantage of these programs. I would also like to see in this section, before we go, that what can we do to save you the most money and technically save you that. I'm going to take the question on the chat window. There is some question in the chat window. I would like to see if I can answer that for the planning section before we go. Give me one second, and I'll pull up that question. And I'm sorry, today my computer has been acting up. So what kind of income, Yatin has asked the question that what kind of income you need to qualify for such strategy, and is it applicable for all the income? So I think that's a great question. The income qualifying criteria for the charitable planning or the solar energy tax credit planning or moving your income from high tax year to low tax year, I normally like that if your total family income is above 200K, you start becoming eligible for some of these strategies. So my recommendation is that if your income is more than 200, 250K family income, please reach out to us, and they are great strategy. It could be W-2, it could be one-time income, it could be business income, it could be 1099 income, it could be LLC, C corporation, or S corporation income. All of them are eligible in that scenario. Again, anyone has questions, please use the Q&A section or chat section for me to answer those questions. Yatin, that's a great question. Thank you very much. So now I would like to continue the session. So some of these programs were introduced as part of the CARES Act, which was passed on April 30th, 2020 to help small business. One of the most recent program that is still open is called Main Street Lending Program. It is designed to provide support to small and medium-sized business and their employees across United States. And it is intended to provide additional credit for business that are suffering from COVID-19 situation. Any business that was established prior to March 13, 2020, or has employees between yourself and 15,000 employees, or have revenues less than $5 billion, are eligible for these programs. The company should have been incorporated in the United States, and the expenses or the needs should be for United States business. What is the difference between three programs? PPP, EIDL, and Main Street. PPP, EIDL, and Main Street, the main key difference between this program is the loan is based on, in Triple P, the loan was based on average monthly payroll. In EIDL, the loan is based on your cost of goods sold and revenue. In Main Street Lending Program, your loan program is based on EBITDA or earnings before interest, tax, depreciation, amortization. So whatever your net income is there, you add back your interest amount, tax amount, depreciation amount, and amortization amount. That's how you calculate EBITDA. In Triple P program, the loan program is forgivable as long as you use it for allowable use. Now, recently there has been recommendation in the latest stimulus to make sure that all the loans automatically below 150K could be converted to be forgivable in Triple P. It is not yet approved, but earlier approval as it stands today, as long as you have used your money 60% for payroll and 40% for your other needs, then that loan could be forgivable. EIDL loan, only $1,000 of grant to $10,000 grant is forgivable. And in Main Street Lending Program, there is no forgiveness feature. The repayment period of Triple P loan, which is not forgivable, is 2 to 5 years. EIDL loan is 30 years and Main Street loan is 5 years. Interest rate for PPP program, which is not forgivable, or amounts that is left over after forgiveness, is 1%. EIDL is 3.75% and Main Street is 3.5%, which is LIBOR plus 3%. Payment deferral is for 6 months. EIDL payment deferral is end of 2020. Main Street payment deferral is for 1 year and principal is for 2 years. Underwriting, every business that had payroll last year was automatically approved by banks and SBA. EIDL was at a discretion of SBA and Main Street was is a discretion of banking. So, what are the programs available within Main Street Lending Program? There are 3 different kinds again within Main Street Lending Program, which is divided further into 3 different kinds. Main Street Lending New Loan Facility, Main Street Lending Priority Loan Facility, and Main Street Lending Extended Loan Facility. Under New Loan Program, the maximum loan available is 250K. Under Priority Loan Funding Program, the maximum loan available is 250K. And in MSELF, the maximum loan funding program is available is $10 million. Maximum loan amount is $35, $50 million and $300 million. Loan types are secured and unsecured both. Maturity is 5 years. Interest rate is LIBOR plus 300 basis point. Now there is a requirement in Senate and House both that they are requesting to really see that if they can ease the terms of Main Street Lending Program and extend the repayment terms, but it is not yet approved. We would see and keep our eyes open, and next ongoing webinar, which we do every week, I would keep adding every week on Saturdays at 3 p.m. Perfect Tax. I do webinar for Perfect Group of Companies and Perfect Capital. So do attend this webinar, and as attendance of this webinar, every attendee do get automatically an entrance to a drive-in theater movie that is going to play in next coming week. So we would be sending in, an email coupon for you to attend the drive-in theater at our Fun Movie Grill in Irving. We have a drive-in theater. So as an attendee, you would get technically a free, you can take your family and kids for taking and spending this hour, 2 hours with us. We really appreciate that. And, you'll be, entered automatically into a draw and for a full year of, free movies, which is happening every month. But you, at the same time, you would also be getting technically 1 free entrance for your car, along with 5 people in your car to drive-in theater in Irving. Those things. So you should, look out for your email, and we'll be sending out an email coupon for that. Prepayment allowed. Prepayment is allowed in all 3 loans. Principal and interest deferment is for 2 years, and interest is deferred for 1 year. Principal is deferred for 2 years. Principal amortization repayment terms are 15% at the end of 30 years, 15% at the end of 4th year, and a balloon payment at the end of 70% at the end of 5th year. Government buys some of the loans and bank retains 5% of the loan. Government buys 75%, bank retains 5%. An eligible borrower will pay original student fee of 1% and 1.5% for Perfect Capital. Why choose people like Perfect Capital? Why choose Perfect Capital to help you with your loan for PPP, EIDL, or MSLP? One thing, Perfect Capital has an expert team of experts available in the company who are continuously helping you optimize and trying to maximize your loans. Some people mention that PPP, but we have got a lot of clients where they've got more PPP loans than technically 2.5 times, which we were able to negotiate with the bank. Same thing, we were able to get more loans on EIDL side as well. And people who have got already loans for EIDL, my strong recommendation is to approach Perfect Capital, because we have been hearing from Capitol Hill, from some of our friends, that there could be a second round of PPP and second round of EIDL as well. So my recommendation is that schedule an appointment right now, get your documents in order with Perfect Capital, and we will help you maximize this thing. So we have it ready, and as soon as this program opens up, they are limitedly funded and we can technically apply for them right away. Perfect Capital is over 200 years of financial experience with banking experience, and we have helped last year receive over $100 million in loans from different banking institutions and government programs for our clients and for our own businesses. Peace of mind. Perfect Capital gives you that peace of mind where your experts are handling your case. If you do it yourself, it's very stressful. And cases like MSLP or Main Street Lending Program are very thorough program, and they require a huge amount of knowledge. If someone does not have knowledge about how to work on a loans, then there's a very little chance that their loans might be approved. So it's very, very important. Which business are ineligible to apply? Non-profit were not eligible to apply earlier, but now non-profits are eligible to apply. Financial businesses primarily engage in business of lending, like banks, or passive developers, life insurance companies, business located in foreign country are ineligible to apply. Pyramid sale distribution plans, business deriving more than 1/3 of gross revenues from legal gambling activities, illegal activities, private clubs and business which are limiting membership not based on the capacity, government-owned entities, business principally engaged in teaching religious belief were ineligible to apply. Present live performance, any business that is, not approved by SBA are automatically not eligible to apply. The loans are available which could help the sustainability of your business, ultimately leading to success of your business. How long will the program be in effect? The current program now has been extended from September 30th to December 31st. Is there a limit to the size of the program? Current program is authorized to purchase MSLP loans up to $600 billion. All the entities that are established before March 13, 2020 and are eligible under the SBA program are eligible to apply. This is the number I want to share with you for Perfect Capital, Perfect Tax, 469-213-1519, or email to info@perfecttax.com or sales team at perfecttax.com, and our team of experts would help you achieve some of these things. I'm going to stay back. Thank you everyone for attending this webinar today. I'm going to stay back on this webinar and going to continue answering some of the questions which you guys have for this thing. I have one more question on the screen. Let me see. Let me try to take this question. So one of the question was asked was that does Perfect Tax guarantees that they will only charge the fees if there is a savings on tax planning? And yes, Perfect Tax only takes up your case if they feel that they can save you money on tax savings. If they cannot save you money on tax savings, they even will not accept your case. So our first consultation is absolutely free and does not carry any cost. Again, I appreciate everyone joining this webinar today afternoon. My name is Sam Thakkar, and thank you for joining. I hope I was able to add some value to your afternoon and answer some questions. There is a difference between people who implement and not implement or procrastinate. Be that person, technically take that first leap of faith, set up a time, schedule your meetings up where we can help you save money on tax planning, and we can technically add value to you. Again, number is 469-213-1519, or you can reach out to us at info@perfecttax.com or sales team at perfecttax.com. Our experts are available also on weekends to answer your questions. Thank you again, everyone, for joining this webinar today afternoon. Thank you.